So 2019 doesn't look very good. Consensus continues to expect a growth of earnings that looks impossible to me, to be fairly honest, and I'm trying to figure out how they get to almost double-digit earnings growth. Not just that, but also you have mostly multi-mega cap conglomerates that have acquired profits at very high multiples abroad. They are going to see the negative effects of commodity slowdown, currency risk, etc. So it is quite difficult to see what is going to drive markets further, because at the same time you have the slowdown in the economy in Europe.
None of these things sound like they're going to change anytime soon.
No, they're not going to change because
so when does the market? Are we just done for this cycle in terms of the investment case around Europe?
I think that the investment case around Europe is nowhere to be found in the large names of the indices. You have to look below that. You have to go to companies very much in particular. And if you look at actually in the markets, they've not done particularly badly. But at the end of the day, you're talking of names that are ex-growth and that are not going to deliver stronger growth next year. In fact, they're going to see the slowdown coming from both emerging and the local markets. And you know, it is what it is. You can't fight demographics, low growth and high taxes through the stock market. It's not going to deliver multiple expansion. It's the typical case of a value trap.
So how do you invest through Brexit, Daniel?
Well, I'm actually quite more positive on the UK than on the growth of the European Union. I think that we are seeing that the latest economic data from the United Kingdom is showing much stronger numbers than actually what we have seen from the European Union as an aggregate, obviously hindered by France and by Italy. And the slowdown in Germany. But I think that the way to look at it is, if you look at the FTSE, you have companies that are global, that are mostly commodity related, that have most of their earnings outside of the UK. So they've actually performed quite well precisely because of that. And I continue to believe that that is what you need to look for. You need to look for companies that defend margins, defend their growth, and that have the lowest exposure to obviously stagnating markets like the Eurozone in the next couple of years.
What's your base case for how Brexit actually happens, and what's your base case for the British pound?
Yeah, that's a tough one. That is definitely the million-dollar question. I think that there will be a negotiated process. I think that the agreement that has been reached and that was rejected is a base case to start a new negotiation. I think that neither the European Union nor the individual countries can afford to get to a no-deal Brexit because of the massive trade surplus that exists between individual countries and the UK itself. And at the same time, the UK has a tremendous surplus in services with the rest of the European Union. So I think there has to be a deal that is mutually beneficial. It is not going to be obviously the one that we have seen, but it'll take probably longer. Nothing that we haven't seen in the past, but I think that I'm actually positive that there will be one.